In this video we are going to talk about 16 dividend stocks that will pay your bills. So before starting, please like this video and subscribe to this channel for our future updates. The Dividend Aristocrats Index is an excellent place to look for high-yielding dividend stocks. Dividend aristocrats are companies that have paid and increased their basic dividend for at least 25 years and are included in the S&P 500 index. Number 16. APLE Hospitality REIT, APLE. It owns 241 Hilton Worldwide Holdings, HLT, and Marriott International, MAR, hotels in the US, NASDAQ, MAR. APLE has a strong presence in Texas, California, and Florida. APLE promotes business travel above leisure in urban and suburban markets. APLE went public in 2015. After ranging between $20 and $16, the stock is trading near its IPO. REITs aren't designed for quick expansion. APLE Hospitality delivers. Number 15. Shaw Communications, SJR. Shaw is Canada's fourth largest telecom. If income is your main concern, look for a quiet, but reliable investment with a dividend return of close to 5% and predictable monthly payouts. Like T-Mobile, NYSE, PCS, did with Verizon and AT&T, Shaw may be able to gain market share by aggressively lowering prices. As evidenced by the current quarter's 9% gain in ARPU and over 85,000 new wireless subscribers, this strategy may finally pay off. Number 14. LTC Properties, LTC. Despite recent market turmoil, LTC Properties, NYSE, LTC has begun to improve. Given its long-term track record and large dividend distribution, this low-cost REIT may still be a solid buy now. A 50-50 mix of assisted living and skilled nursing facilities is owned by LTC. As the baby boomers retire and live longer, demand for such services should grow. Unlike other REITs, LTC hasn't boosted its dividend since 2016, keeping it at 19 cents. The present yield of around 5% and the constant payout ratio make the earning potential quite high. Number 13. Stellus Capital Investment Corp, SCM. Stellus Capital's dividends plummeted from around 31 cents to 10 cents each month a year ago. But this financial stock's share price has risen sharply from sub-$10 lows in early 2022. Almost $13 now. SCM invests in private middle-market enterprises as a first lien or unitranche lender, giving it additional influence over payment arrangements. The lower middle-market companies don't have the substantial coffers or entrenched operations of global blue-chip stocks, so there is some danger. As a result, this monthly dividend stock can charge a higher loan premium and pay higher dividends. Number 12. Prospect Capital Corp, SEC. Prospect Capital pays a monthly dividend and invests in other companies. Wall Street now sees the SEC portfolio as a strong buy. Thanks to strong fiscal first quarter earnings and high investment income, the stock is up around 70% this year. The long-term appeal of a debt and private equity strategy is the high yield and monthly dividends. This includes everything from candle makers to media and its service providers. Prospect's well-diversified investment portfolio generates regular revenue and monthly dividends. Number 11. PennantPark Floating Rate Capital, PFLT. PennantPark is a monthly dividend stock to consider considering that many expect interest rates to rise soon. PFLT is a lender to distressed enterprises, putting up cash at high interest rates to mitigate the higher risk involved. During the epidemic, many businesses suffered and PennantPark made some wise and strategic investments. Moreover, PFLT's floating rate loans react to the general rate environment, meaning that if rates rise, PFLT will face higher interest payments. This monthly dividend stock has gained almost 36% this year, including dividends, and has one of the highest yields on this list. Number 10. Main Street Capital Corp, Main. Main Street Capital is up nearly 50% this year, including dividends. It's a mid-sized financial organization that makes debt and equity investments in smaller companies to maximize shareholder profits. Main's portfolio includes a digital marketing firm, a homemaker, a coffee shop chain, and many other small and mid-sized businesses. The company has done well thanks to a larger economic rebound that has helped many of these tiny businesses, and its 21-cent monthly dividend has been consistent. Number 9. Horizon Technology Finance Corp., HRZN. Horizon, as its name implies, is a tech-focused finance and investment firm. This company's focus is on life sciences and biotechnology rather than standard Silicon Valley firms. HRZN invests in companies like Castle Creek Biosciences and CSA Medical, which make respiratory devices. These risky early-stage pharma or medical device businesses can be lucrative if they thrive in their areas. HRZN has outperformed the S&P 500 by 35% year-to-date, thanks to a diversified portfolio that helps level out individual investment volatility. Number 8. Gladstone Commercial Corp. Good. Gladstone Commercial is a REIT with a broad portfolio of logistics, light industrial, and commercial properties. Unlike other REITs, it is less sensitive to changes in housing or mortgage rates, yet it still has high monthly dividend potential. The company's over 130 assets are split roughly 50-50 between industrial and commercial holdings, providing great diversification. Gladstone Commercial has also been one of Wall Street's most reliable monthly dividend stocks, with no disruptions since 2005, including the pandemic and the financial crisis. That's a great track record for long-term investors. Number 7. EPR Properties, EPR. Unlike Dynex, EPR Properties owns tangible properties. EPR is a commercial real estate firm with interests in entertainment venues such as movie theaters, resorts, and casinos. EPR is successfully run because it handles triple net leases with venue operators that oblige tenants to cover upkeep, insurance, and taxes. After the worst of the pandemic setbacks, this monthly dividend stock only recently resumed paying this summer. But the yearly yield on its 25-cent payouts adds up. Number 6. Dynex Capital Inc., ticker, DX. Even though shares are essentially flat in 2021 after losing summer gains, Dynex is still a monthly dividend company to monitor. Because it has paid out 13-cent monthly dividends to stockholders this year, it has generated a large income stream. Dynex's monthly dividends are powered by its REIT structure, like a few other monthly dividend stocks on this list. This unique, publicly listed stock must return 90% of its taxable income to stockholders as dividends. Unlike some other REITs, DX invests in mortgage-backed securities, including federally insured loans through Fannie Mae and Freddie Mac. Unfortunately, interest rate volatility has caused share price volatility for numerous mortgage-related firms. However, as the present yield shows, this monthly dividend stock's income potential remains high. Number 5. Walgreens Boots Alliance, NYSE, WBA. Walgreens, one of the world's largest retail drugstore chains, is undertaking a major transformation. Its plans include cost reductions, increased digital sales, and, perhaps most critically, the addition of full-service healthcare clinics to hundreds of its retail sites in the near future. Becoming a more integrated healthcare organization should help this lucrative company become even more profitable, allowing it to increase its already substantial dividend. Walgreens stock offers dividend investors a lot to enjoy, with a dividend yield well above 3% at current writing and 45 years of annual payout growth. Number 4. Target, NYSE, TGT. Target has repeatedly demonstrated that it does not need to compete on price to win in the harsh world of cheap retailing. It has consistently outperformed its competitors in terms of profitability, with some of the greatest gross and operating margins in the industry. Simultaneously, the company's focus on building its e-commerce business and extending its in-store products has kept sales and profitability growing at a healthy pace. Target should be on dividend investors' shopping list, with a 49-year dividend growth streak. Number 3. Lowe's, NYSE, Low. The home improvement behemoth may not appear to be a particularly intriguing stock. That is, unless you enjoy dividend growth. The corporation has increased its dividend for 46 years in a row, and the distribution has increased by 471% in the last decade alone, Another key figure in Lowe's favor: the typical home in the United States is 37 years old. Lowe's will see a lot of money from the next generation of dyeers. Number 2. Johnson & Johnson, NYSE, J&J. Johnson & Johnson has a slew of great brands that make products that people need, particularly in the healthcare industry. Johnson & Johnson, in addition to its Band-Aid, Neutrogena, Tylenol, Zyrtec, Benadryl, and Johnson's trademarks, has vast and consistently successful pharmaceutical and medical device activities, which have allowed the corporation to raise its dividend for 58 consecutive years. This unrivaled variety of consumer health brands, pharmaceuticals, and medical devices has proven to be a huge profit generator. Number 1. Realty Income, NYSE Smiley Face. Johnson & Johnson has a slew of great brands that make products that people need, particularly in the healthcare industry. Johnson & Johnson, in addition to its Band-Aid, Neutrogena, Tylenol, Zyrtec, Benadryl, and Johnson's trademarks, has vast and consistently successful pharmaceutical and medical device activities, which have allowed the corporation to raise its dividend for 58 consecutive years. This unrivaled variety of consumer health brands, pharmaceuticals, and medical devices has proven to be a huge profit generator. What do you think about our video? Please let us know in the comments area below. If you enjoyed this video and would want to hear from me again, please subscribe and turn on the notification before leaving. Thank you for watching us.